Consumers can now breathe a sigh of relief as the consumer price inflation eased from 6.3% in May to 5.4% in June 2023. The annual rate of the consumer price inflation has fallen back within the Reserve Bank's 3 to 6% target. To tell us more what these numbers mean, we are now joined in studio by SABC News economics editor Tshepo Mongoai. Tshepo, good morning. Thank you so much for making time for us. Some analysts were saying that they were expecting it to come at around 5.4%, and it came at this particular figure. They were close to being spot on.
Yeah, no, absolutely. But generally, it was actually better than expected by most analysts. But what is good, as you indicated, is that now finally we are within the Reserve Bank target band of 3 to 6%, and of course the Reserve Bank will prefer to have it around 4%, more or less around there. But thanks to food inflation, that has been coming down for 3 consecutive months. Now it's still a double-digit increase, around 11%, but there's a very clear trend that is slowing. Also transport. Remember, at some point we were paying about 24 rand inland for a liter of unleaded. It has come down substantially, and that we are starting to see in the inflation numbers. So generally, the price pressures are, of course, they are still strong in the economy. Consumers are feeling them, but what we are seeing is that those rate decisions, they are actually filtering down into the economy. They are doing the work that the Reserve Bank wanted it to do, which is to make sure that inflation is not generalized, and then it could be cooled off. But prices are still high. I mean, if you're talking food at 11%, food price is still very, very high for many consumers. But the question now is, what's the Reserve Bank going to make out of these numbers? There are still some analysts who are saying that we could see a 25 basis point. But we know, I mean, it could happen because Reserve Bank tends to anchor inflation expectations in order to send a very strong message in the market to say, we are ready, we're going to act, we are worried about inflation. Yes, there are signs that it's coming down, but we are determined. But of course, they will have to look at the broader economy. It's taking strain. Consumers are under pressure. And we know the mandate is that as much as they must target the rate of inflation, they must also think about the growth, sustainable growth. It's in the constitution of the Reserve Bank, and I'm sure it's something that they
What about the rand? And we've seen that the rand has strengthened also.
That helps. It helps a lot. We've seen the recent strengthening of the rand, largely because of the developments in the US that has actually helping emerging markets. We've seen the inflation numbers in the US, the jobs numbers, that tends to show that yes, there are some improvement in the US economy in terms of dealing with inflation. It's also coming down, but there's a very strong possibility that we could see inflation going up because of the jobs numbers that came out of the US, and that has been very supportive to us. But we know that the rand is quite volatile, and it could go anyway, either because of factors that are happening domestically or internationally. They could actually drive the rand even weaker at any time. But I think they will look at the rand now that it has strengthened, and there's a very strong case generally for the Reserve Bank to leave the interest rates unchanged.
Well, so I guess a lot of people would welcome such a move. But speaking about what's happening internationally as well, is the decision that was taken by Russia to pull out of the Black Sea grain agreement with the United Nations, of course, and that deal being brokered by Turkey as well, is that would the MPC also look into what the possibility of food prices increase because of that decision, and then factor that into their decision that they'll announce tomorrow?
No, absolutely. Remember, theirs is data-driven. They look at data. And I don't think the markets has already factored in such developments in terms of what could be the impact when it comes to wheat prices, grain prices, and so forth. But with the previous one, we know that wheat prices corn prices, they shot through the roof, and we felt them domestically. For example, wheat, we don't have enough in terms of to supply and satisfy the local markets. We still rely on imports. And as much as we do have our own so-called suffix price, which is where the market, the prices are made domestically for corn, but we also know that those suffix prices are also influenced by what's happening internationally. We are also price takers in terms of some of the grain, like as I indicated, wheat. That's where we could actually see the price of bread going up and other food items that are, use wheat as an ingredient. So, and I'm sure they are looking at this development very closely. We haven't seen an overreaction in terms of the agricultural commodity prices out of this. Of course, there's been some movement upward, but I don't think it's quite significant to create an alarm at this moment. But we'll watch the space and see.
And also the announcement around the fuel prices. So the Central Energy Fund saying that the petrol prices are fairly flat, with the petrol 93 in for a slight drop, as well as 95 for a slight increase. What can we expect then from a broader spectrum when it comes to the price of fuel going forward?
The preliminary numbers from Central Energy Fund show that we could see a drop, another drop, which would be like the third consecutive drop in the price of petrol. And also diesel, we've seen some drop, although it was not consistent. So the broader picture, if you look at the inflation numbers, for example, transport, the main input in transport is fuel. Fuel is coming down and has been coming down, and as a result we see some relief there. If you look at the CPI, it's got about 12 indicators, and out of that 5 came down. That include food and transport, which will reflect on the decline in petrol price. So we are expecting that these prices will come down. Brent crude also has been quite stable. And there's not been any movement that could actually create some worry in the market. And that, Aldrin, adds to a case that the Reserve Bank should and ought to leave the repo rates unchanged.
So what's your take? Will they leave it unchanged, or is it 25 basis points?
I think they will leave it unchanged.
They will leave it unchanged. Let's see if they would leave it unchanged. Thank you so much for your time, Tshepo Mongoai there, who is our economics editor here at SABC News.